Hello everyone, this is Arnaud Delapierre and I'm pleased to be with you for a new episode. Today we're going to discuss a topic that intrigues quite a few investors, BNP Paribas stock and its dividend. Many people wonder whether they should dive in head first or take precautions. We are going to dissect all this in detail. From the yield offered to the bank's solidity, including the risks such a position might imply. So sit back comfortably as always and let's stay focused because I intend to provide you with a comprehensive insight into this company. Dividends will be the starting point of this episode, which is about looking into what a dividend is to begin with. Essentially, it is a portion of the profit distributed by the company to its shareholders. It represents an additional income for those who hold shares of the company and can offer good stability, especially when the company has a reliable payment history. In the case of BNP Paribas, we observe regular payments for many years. We can say that it attracts yield-focused investors as long as they carefully assess the situation before investing. The bank BNP Paribas is considered one of the largest banks in Europe. Thanks to its presence in different areas of finance, it has built a solid reputation. Its size gives it certain advantages, such as a wide diversification of its revenues and an ability to weather economic storms with fewer jolts than other institutions. Obviously, a banking giant is not immune to turmoil related to the economic situation or competition. Nevertheless, many shareholders are interested in it for its resilient profile and attractive dividend, which leads us to ask, is it a good choice in the long term? We'll have a little fun party. I'm going to introduce you to the application Notrade for efficient trading. It is an application that is free on iOS and Android and provides trading signals for the stock market, cryptocurrencies, ETFs, gold, etc. etc. The interface is user-friendly. The reliability of the alerts allows identifying interesting opportunities because it is managed by AI without too many complications. You have a score that goes from 0 to 100 and you can very easily know when it is the moment to buy, the moment to do nothing, and the moment to sell. Personally, I use it. I have integrated it into my strategy, and I am extremely satisfied. I encourage you to try it, especially since it is free. It doesn't take time. Let's get back to the main topic. To assess the stability of a dividend, we often look at the payment history and the consistency of financial results. On the BNP Paribas side, we notice a certain regularity over several years, as mentioned a bit earlier, with a desire to reward shareholders in a fairly stable manner. Of course, the financial crisis of 2008 or recent global events may have led to adjustments, but the overall trend remains positive. Before acquiring shares, it is good to look at the profit distribution ratio. In the case of BNP, it remains reasonable, indicating a certain balance between remuneration and reinvestment. The strategy of targeting companies that pay regular dividends often attracts investors seeking passive income or a financial supplement. Some believe that the stability of these payments reflects the health and maturity of a company. In the case of a bank like BNP Paribas, the solidity of the financial sector plays a role in shareholder confidence. However, focusing solely on the dividend can lead to overlooking the overall performance of the stock. That is why it is important to pay attention to the bank's fundamentals, economic trends, and sector competition. That's a lot of and the advantages of a dividend stock generally include solid profitability, even when the share price remains stagnant. Receiving a regular payment can also partially compensate for market volatility. Some studies show that dividend stocks resist shocks better because the companies involved often have a more experienced financial model. In addition to the immediate yield, there is often potential for capital gain if the stock rises. In the case of BNP Paribas, the significant capitalization and international influence are additional advantages that can provide some comfort to those seeking a well-established banking reference. Even though the company enjoys a significant position in the banking scene, macroeconomic events, interest rates, and perhaps new regulation or regulations can still impact the profitability of BNP Paribas. Margins can shrink if monetary policy tightens or if competition intensifies. On the other hand, the geographical distribution of activities can be both an advantage and also a risk depending on the economic situation of each area. That's why one should not rely solely on the dividend, but closely analyze the overall financial health and growth prospects. BNP Paribas relies on several business sectors: retail banking, investment banking, insurance, and asset management. This diversity allows it to cushion certain shocks and tap into different markets. Additionally, its position among European leaders gives it strategic leverage to succeed in international collaborations or attract new clients. At the level of governance, the bank strives to improve its corporate social responsibility policy, which is often valued by investors concerned with societal impact. Of course, this does not shield the bank from potential turbulence, but it still underscores the desire to maintain a robust and respectful image. For those considering buying BNP Paribas in hopes of a solid dividend, it is useful to consider the bank's likely development in the coming years. New technologies, the transformation of payment habits, and the rise of digital may offer various avenues to strengthen the competitiveness. However, the banking sector faces increased competition from more agile neobanks and strict regulations. On a macro level, the health of the economy and the ECB's interest rate policies are obviously elements to monitor. In short, we must assess BNP's ability to adapt. Taxation question. The question of taxation is not to be overlooked either, as dividends are subject to income tax or flat tax depending on each individual's personal situation. This can significantly change the net return received. For some savers considering the securities account against the PEA can save and make a difference. There is no magic formula. You need to adjust your strategy based on your goals, investment horizon, and tax bracket. Let's not forget that tax reforms evolve and a favorable rate today might become a bit less advantageous tomorrow. Many investors also consider reinvesting dividends as a way to boost their wealth over the long term. The principle is simple. Instead of cashing in directly, buying back shares of the company to gradually strengthen one's position. This technique can benefit from the compounding effect, helping to grow one's portfolio. In the case of BNP Paribas, this means that with each payment, one can extend their shares to enhance future gains. This method does not ensure an immediate profit, but it can amplify the total value held, especially if the bank maintains a satisfactory dividend over time. The stock market can bring its share of surprises. Probably some of you have learned this the hard way. Crises, economic announcements, and market trends can cause BNP stock to fluctuate. To feel more at ease, some managers prefer to adopt a long-term approach and not panic at every dip. As long as the fundamentals, of course, remain correct and the dividend is not threatened, many investors stay the course. Obviously, the priority remains the coherence of your investment plan. Without an appropriate plan and a good risk tolerance, it is easy to make emotional decisions that harm overall performance. Investing methodically might be the point we will discuss right after. To evaluate BNP stock, several criteria must be considered: financial solidity, profitability outlook, economic climate, and regulatory changes. Making a reasoned choice also involves diversification so as not to bet everything on a single security. Regularly check if the company still meets your expectations and aligns with a possible risk tolerance. A good buying strategy includes a medium or long-term vision, especially in the banking sector. It is possible to integrate a more dynamic portion of one's portfolio elsewhere, while benefiting from BNP Paribas' dividend for a more defensive part. We are reaching the end of this overview on BNP Paribas and its famous dividend. Our discussion highlighted the interesting aspect of this value, but also the uncertainties and caution points not to overlook. I hope this presentation has given you clear ways to better understand this investment. It's up to you to decide if the remuneration proposed by BNP Paribas matches your strategy and investor profile. If you like this video, subscribe and give a thumbs up to support the channel. Thank you and see you soon for more analysis dedicated to bank and stock dividends.